America's financial heartbeat isn't crashing. It's suffocating, slowly, quietly, and in plain sight. Over 61% of Americans now live paycheck to paycheck. Not just low-income households, not just minimum wage workers. Even families earning $120,000 a year are falling behind on rent. Since 2019, the cost of survival has detonated. Grocery bills are up 68%. Car insurance and electricity have doubled. Healthcare premiums keep rising, silently, relentlessly. Meanwhile, wages barely moved 3%. A full-time worker today has the same buying power as someone in 1999, but faces costs designed for 2025's economy. This isn't inflation anymore. It's economic suffocation disguised as progress. Behind every paycheck is a quiet panic no one talks about. What used to be financial stress has become a full-time survival routine. People aren't saving, they aren't planning, they're praying their balance doesn't hit zero before the next deposit lands. A $1,200 paycheck disappears before it's even spent. $900 goes to rent, $150 to utilities, the rest to groceries that barely last the week. Then the cycle resets. Overdraft, credit card, buy now, pay later, short-term loans, not for luxuries, but for life. Debt has replaced income as the foundation of everyday survival. And the most disturbing truth? This didn't happen by accident. While headlines say inflation is cooling, while institutions claim the economy is resilient, millions of Americans are being priced out of their own existence. This isn't a temporary crisis, it's a structural one. And once you see how this system actually works, you'll realize why working harder no longer leads to stability, and why survival itself now carries a price tag. Paycheck to paycheck, when survival becomes a full-time job. What we're witnessing isn't financial stress anymore. It's survival, normalized. Behind every paycheck in America today, there's a quiet panic no one talks about. For decades, living paycheck to paycheck was treated as a temporary phase, something you passed through, a stepping stone on the way to stability, but that line has snapped. According to recent surveys, over 61% of Americans now live paycheck to paycheck. And this isn't limited to low-income households. Even workers earning six figures are falling behind. 4 in 10 hourly workers say that simply getting through 2 weeks without borrowing money would feel like an upgrade in their living standards. That's not progress, that's desperation, quietly normalized. A typical paycheck today doesn't fund a life, it delays collapse. A $1,200 deposit lands in an account already depleted. $900 goes straight to rent, $150 to utilities. The rest disappears at the grocery store and doesn't even last the week. There's no buffer, no margin, no room for error. The moment the card swipes, the countdown starts again. Overdraft fees, credit cards, buy now, pay later, short-term loans, not for luxury, not for excess, but for survival. What's changed isn't behavior, it's the role of debt. Debt is no longer a backup plan, it's the operating system. Americans aren't stretching their money anymore, they're stretching time. Every paycheck is borrowed from the future. Every swipe pushes today's survival onto tomorrow's balance. This didn't happen overnight. For decades, wages flatlined while the cost of simply existing kept rising. People adapted. They cut back. They optimized. They endured. But now, endurance isn't enough. When income can no longer cover the basics, borrowing becomes routine. And when borrowing becomes routine, freedom quietly disappears. This is the moment where financial stress transforms into something far more dangerous. Because once survival itself becomes transactional, the system stops rewarding work and starts monetizing desperation. And that's where the real story begins. This is not inflation, but financialization of life. What's happening in America isn't just higher prices, it's something deeper, something far more permanent. Inflation makes headlines, but inflation doesn't explain why survival itself now feels unaffordable. On paper, consumer prices have risen about 32% since 2019. That's the number officials like to quote: clean, contained, reassuring. But real life doesn't run on averages. In the real world, the cost required to maintain the same lifestyle has surged closer to 64% since 2020. Food prices are up 68%. Rent is up 37%. Utilities have climbed 41%. Healthcare premiums have quietly jumped more than 55%. This isn't a spike, it's a structural shift. What's collapsing isn't just purchasing power, it's the foundation of modern living. The grocery store has become a battlefield of shrinkflation. Boxes get smaller, prices don't. A bag of groceries that once lasted a week now disappears in 4 days. Utilities add adjustment fees. Landlords add market corrections. Insurance companies quietly raise premiums under risk recalibration. Nothing feels dramatic on its own. That's the design. The system doesn't shock you, it drains you. $1 from 2019 now buys about 72 cents worth of goods. The currency still says, "In God we trust," but the economy no longer runs on trust, it runs on debt. While officials claim inflation is cooling, the real cost index, the amount required just to stay in place, keeps climbing. And that's because this isn't traditional inflation anymore. It's the financialization of daily life. Every necessity has been turned into a profit stream. Housing, food, healthcare, education, energy, connectivity. Survival has become a subscription service. You don't own stability anymore. You rent it monthly at a rising rate. A decade ago, the average household spent about 60% of income on non-discretionary needs. Today, that number is over 80%. That leaves less than 20% for everything else: savings, emergencies, retirement, even basic leisure. This isn't lifestyle inflation, it's extraction. Every additional fee, every adjustment, every service enhancement quietly transfers purchasing power upward, not through force, through necessity. When every essential product is indexed to profit, freedom itself becomes unaffordable. This is why people feel like they're working harder but falling further behind, because the game has changed. The American dream didn't vanish, it was repriced. And like every extraction system in history, it needs a disguise. In America, that disguise is data. On paper, inflation is under control. In reality, the cost of being alive keeps compounding. And to understand how this illusion is maintained, we have to look at the institution that claims to be managing it all: the Federal Reserve. The Fed, data, and the illusion of stability. The Federal Reserve insists inflation is under control. 2.8%, they say, as if a decimal point could erase the panic at the checkout counter. This isn't economic management, it's narrative engineering. Official inflation numbers capture averages, not realities. They flatten pain into spreadsheets. They reduce survival into statistics. For working households, the real inflation they experience isn't 2 or 3%, it's over 40%. Because the things people actually spend money on, food, rent, utilities, insurance, healthcare, aren't weighted the same way in official models. The result is an economy that looks stable on paper, while millions feel like they're drowning. Behind this illusion sits a trillion-dollar mechanism of control. The Federal Reserve doesn't fight inflation by fixing prices. It manipulates behavior. Lower interest rates and cheap credit floods the system. Spending rises, asset prices inflate. The wealthy ride the wave. Raise rates too high and borrowing collapses. Businesses freeze. Layoffs spread. The workers pay the price. Either way, ordinary Americans lose. When money loses value, savings erode. When borrowing costs spike, jobs disappear. What's sold as stability becomes a slow-motion transfer of wealth upward, from labor to leverage, from wages to capital. Volatility isn't a bug, it's the business model. High rates crush borrowers and reward lenders. Low rates inflate bubbles the wealthy can exit before they burst. This isn't incompetence, it's design.
The Fed's dual mandate, stable prices and full employment, has become a paradox it no longer tries to resolve. Stability for markets now means instability for citizens, and nowhere is this clearer than in the numbers we're told to trust. Unemployment is reported at 4.1%, a sign of strength, they claim. But that number excludes millions. It ignores the underemployed, the part-timers who want full-time work, the gig workers barely scraping by, the workers earning below subsistence wages. Count them, and the real figure isn't 4%, it's closer to 25%. A quarter of the nation is either jobless or functionally excluded from prosperity. Yet officials call the economy resilient. This is why trust is collapsing. People may not understand CPI formulas or labor classifications, but they feel the lie every time their paycheck stretches thinner. The more the Fed claims control, the less control the public actually has. The economy still appears alive in reports and headlines, but beneath the data, the pulse is fading. And the next illusion holding this system together is the so-called booming job market, because what looks like opportunity on paper is often nothing more than a digital mirage. The fake labor market and the shortage of living wage jobs. The job market looks strong on paper. Politicians boast out millions of openings. Headlines declare a labor shortage. But the reality is far different. Behind the numbers lies a digital graveyard of job listings, positions that will never be filled. Corporations flood boards with phantom openings to project strength, inflate investor confidence, or meet regulatory requirements. A single company might post 200 jobs while hiring only 2 people. The rest are empty promises engineered for quarterly reports. Job seekers apply hundreds of times, only to face automated rejections or endless interview loops that lead nowhere. Opportunity exists in theory, but it's structurally inaccessible. This is not a labor shortage, it's a shortage of living wage work. Millions are forced into part-time, low-wage, or contract positions. Workers are labeled independent, yet they have no independence, no health care, no retirement, no protection. 1 in 4 Americans now earns less than $25,000 per year, not enough to secure a studio apartment in most major cities. The tragedy isn't personal failure, it's structural. By misclassifying jobs, padding reports, and redefining what employed means, the system manufactures stability that doesn't exist. It convinces people that if they just try harder, they'll succeed. But mathematically, the system is incapable of rewarding them. A functioning labor market should connect human effort to security. America's version connects it to survival anxiety. And all of this loops back to the same mechanism that feeds Wall Street optimism and government spin.
While officials cite low unemployment as proof of recovery, half the workforce is one medical bill away from bankruptcy. The facade holds, for now, but pressure is rising. An economy built on manipulated numbers and unpaid labor cannot expand forever. It eventually implodes quietly, then all at once. When the illusion of stable employment fades, a new economy rises, one powered not by productivity, but by borrowing. Debt becomes the bloodstream of the nation. Every purchase, every necessity, every moment of relief flows through credit.
Debt, the new lifeblood of the economy. Debt is no longer a tool. It's the operating system of modern America. Credit card balances have surpassed $1.25 trillion, with average APRs around 24.5%. Buy now, pay later apps, payday loans, early wage access tools, they aren't conveniences, they're lifelines disguised as freedom. Households aren't spending to live, they're borrowing to survive. A full generation has been conditioned to measure success not in ownership, but in credit limits. Millennials and Gen Z are at the center of this financial experiment. By their early 20s, the average young adult carries over $21,000 in non-mortgage debt. Nearly 3 in 10 use credit to buy food. The cost of entry into adulthood, education, housing, transportation has inflated beyond reach. Home ownership is now a distant dream. Median home prices equal 8.6 times the average annual income for under 30s, compared to 2.9 times in 1980. Student loans add another $1.77 trillion to the debt pile. Disposable income doesn't disappear, it's confiscated through interest. Every swipe, every subscription, every deferred bill transfers wealth upward, pixel by pixel, month by month. Financial innovation disguises this exploitation. Co-buying housing apps turn friends into co-mortgage partners. Employers push early wage access tools, essentially digital payday loans.
Young people are no longer customers, they are collateral. The psychological toll is precise. 63% of Gen Z report daily anxiety about money, the highest in U.S. history. Economic fear has become the default emotional state. This isn't coincidence, it's control. Fearful citizens don't demand reform, they chase survival. The more they chase, the deeper they sink. Debt has replaced wages as the fuel of economic activity. It props up consumption, masks stagnating income, and keeps the illusion of growth alive. But beneath the surface lies decay. Each interest payment transfers present labor to the lender's future. It's a negative savings rate disguised as momentum. And when repayment finally breaks, the cycle restarts with more credit, creating a system that thrives on inevitable collapse. This isn't capitalism, it's cannibalism disguised as opportunity. Citizens no longer vote with ballots, they vote with credit scores. The banks always win. The economy survives, for now, through debt. And as the system extends further, a generation that was promised prosperity now inherits only subservience. History is repeating itself, but more dangerously. History doesn't repeat, it recalibrates. The United States has already faced cycles like this. In the 1970s, inflation peaked near 13%, cooled temporarily, then surged again, triggering a brutal recession that left millions struggling. Now the mechanism is quietly reawakening. Between 2021 and 2022, prices spiked nearly 9%. Then came a brief illusion of stability, not recovery, just a pause. Today, inflation isn't cyclical, it's structural. It's embedded in everything: logistics, rent, healthcare, education,
digital services, even the cost of data. Every rate hike and every stimulus of the past decade now collides in the bloodstream of the economy. The Federal Reserve's temporary cooling periods didn't cure inflation, they only muted it long enough for the next surge to build pressure. And this wave is more dangerous. Unlike the 1970s, America no longer has the industry base, rising demographics, or trade surplus to fall back on. Today, the economy relies on $38 trillion federal debt, collapsing productivity, and a consumption economy held together by credit. Each percentage point increase in interest rates now costs taxpayers hundreds of billions in new interest. The feedback loop turns monetary defense into fiscal suicide. Raise rates too high and unemployment spikes. Drop them too low and asset bubbles inflate. Either way, ordinary Americans lose. Inflation isn't just a number on a page.
It erodes trust, it fractures institutions, it transforms economic mismanagement into collective despair. The signs are arithmetic, not political. Total household debt now surpasses $18.4 trillion. For the first time in history, over 60% of credit holders are either delinquent or paying only the minimum balance. Credit card delinquencies are up 54% year over year. Auto loan defaults are at their highest level since 2009. Corporate bankruptcies have surged 41% in the past 12 months, and personal savings rates have fallen to 3.6%, one of the lowest in modern history. This isn't a credit problem. It's a structural default in slow motion. The system isn't failing catastrophically. It's failing mechanically. Every rescue package, bailout, and fiscal stimulus adds fuel to a burning structure built on leverage, not production. Debt has become the operating system of the American economy. Government borrows to sustain spending, corporations borrow to buy back stock, consumers borrow to buy time. Each layer feeds the next, creating an illusion of motion while masking decay. The American dream no longer rewards work, it monetizes survival. Wages have flatlined, prices have detonated. Debt quietly defines identity. Every dollar borrowed is another day borrowed from the future, from hope, from peace of mind. And the generational consequences are staggering. Gen Z and millennials are bearing the brunt. They graduate with massive student loans, face skyrocketing rent, and enter a workforce that barely pays a living wage. Every swipe of a card, every subscription, every deferred bill transfers wealth upward, pixel by pixel, month by month. Economic fear has become the default emotional state. 63% of Gen Z report daily anxiety about money, the highest ever recorded. Fearful citizens don't demand reform, they chase survival. The more they chase, the deeper they sink. And the structural reality is unavoidable. Debt is no longer a tool of convenience. It's the mechanism that sustains an economy built on survival, not prosperity. Every failure, every default, every missed payment feeds the system, and the system thrives on it. History shows that cycles of denial always end in reckoning. The 1970s ended with stagflation. This time, the correction will be sharper because unlike that era, there is no industrial base to soften the blow. Only debt, speculation, and denial. Prepare, protect, awaken, because when survival becomes a privilege, awareness becomes resistance. The next decade will decide. Will Americans reclaim control or become permanent tenants in their own economy? If you found this video eye-opening, take action. Subscribe to the channel for more deep dives into the economy, finance, and the forces shaping our future. Like this video if it helped you understand why survival is becoming a privilege. Share it with friends and family because awareness is the first step toward resistance. And I want to hear from you. How are you coping with rising costs, debt, and the changing economy?
Drop your thoughts in the comments below. Let's start a conversation about real solutions, not illusions. Remember, knowledge is power. Awareness is resistance. The next decade will decide the fate of millions. Don't wait for the system to dictate your life. Prepare, protect, stay informed. Thank you for watching, and see you in the next video.